Hi, I'm Cameron Neely. I'm the banking capital markets lead at Layer Zero, and you're watching Taking Stock.
Two minutes to go until the one and only closing bell on this Friday, August 21st on the trading floor of the New York Stock Exchange. Manchester United set to do the honors, but first the man himself, Peter Tuchman, the Einstein of Wall Street. Options expiration
I've
today.
never played on the team.
You did not?
No.
I thought you were a Man
They
U
wanted.
legend.
They tried to recruit me. I wasn't ready.
You're not a Man U legend, but you're an NYSC legend.
Yes,
Stock's
true.
up today, but down for the week. What did you see top of mind as we head into the close?
Yesterday, we talked to you and I were on yesterday, and it felt so aggressive on the sell side. It kind of was just a feeling as opposed to any particular reason, and it's sort of the market. We closed on the low of the day yesterday, and it felt almost like, today we just woke the buyers back up. They kind of been sitting on the sidelines for a couple of days being patient, and today they said, you know what, we're seeing the market break down, this is our buying opportunity. So it kind of reaffirmed for me that there's still, buyers are in the wings, there's a bid in the market. To use an old Wall Street expression, the buyers are still here. They're picking their spots, and that's what you saw today. And it was perfectly done, it was perfectly executed. Right, all day long we had really nice sort of buy orders, market on close orders.
Yeah.
And so if you see the way the market, we had a little bit of a blip on the upside earlier, but the rest of the day was solid. It was a nice trend day on the way up. Great way to end the week, even though it was a down week.
Yeah, and into next week we get NVIDIA earnings, we got Jackson Hole. You and I will be talking a lot about what's going on.
Jackson Hole is a big day for this market.
The Einstein of
Love
Wall
you
Street.
all.
More Taking Stock after
Nixon
this.
5.
Time for the close. I gotta learn to wait to talk until the crowd stops cheering. All right, your final tail of the tape on this Friday, the 21st day of the month of August in 2026. The S&P 500 in the green, 0.4%. The Dow 30 components up just under a full percent. The New York Stock Exchange Composite Index in the green, 0.7, and the small caps up 0.8. Materials, healthcare, discretionary, the best of the bunch in the S&P. Some sell-side pressure on utilities, energy, as well as real estate stocks. To the Dow we go. Goldman Sachs, Merck, and Cisco, the big outperformers. Your Dow 30 laggards on this Friday afternoon. Walmart, NVIDIA, and Honeywell. Some more selling pressure in Walmart after yesterday's big 9% drop. The Mag 7 tech stocks, mixed territory. Big outperformance from Tesla shares, up about 6% into the close. Shares of Amazon down 0.8. SpaceX, not quite a Mag 7 stock, kind of a Mag 7 stock, up almost 2% on the day. All this to say, options expiration currently underway. The current trade volume will shift within the next few minutes. Let's bring in our first guest. Julian Koski is Chief Investment Officer at New Age Alpha. Nice to see you here today.
Nice to meet you.
Very grateful for your time. Kind of top of mind for a day like today. It's nice to see green on the big board, but it's the first time in about a month or so since mid to late July you actually have a down week for the markets. What most stood out to you these last few sessions?
Well, I tend not to look at trends through the weeks or the months. I more look at it on a long-term basis. And what we see is really a healthy economy. We don't see the kind of stress that you see in the markets right now. It's very much behaviorally driven. There's always somebody wanting to talk down possible recessions, possible, something bad. But it hasn't showed up in the data, right? The American economy is large and it's resilient. And until we see some of the bad things that are going on, things like inflation, oil, showing up in the data, it's not time to react. So I tend to look at things more long term. I don't see the kind of risk that maybe is being seen right now. Up and down markets are going to happen all the time.
Of course. With eyes on the big picture, what is therefore one long-term story, one long-term reality, Julian, about these markets that you think we should be paying a little bit more attention to?
I think at the end of the day, in the last 17 years, there have been almost 40 drawdowns in the S&P 500, negative drawdowns. If you had stayed 80-20, 71% of the time you would have outperformed. So stay the course. a lot of what's happening in markets today is V-shaped, it's reactionary, and the goal should be stay in the market. There's no evidence to suggest that it's the kind of risk we saw in 2008. There was the only one time where the signals said go to cash. Sure. But all the other signals say, no, stay 80-20, at worst 60-40, but stay in the market.
To be clear, when you say 80-20, you mean equities to bonds?
Correct.
To fixed income.
Correct.
So you mentioned bonds. Let's
yes.
talk fixed income.
Okay.
Because the bond market flashes us some warning signals that simply cannot be ignored.
Right.
We had this kind of strange Treasury buyback program.
Right.
Maybe it's too soon to tell quite yet if we really had the desired impact that Secretary Bessent wants. What did you make of that? And more broadly, how are you thinking in particular of that long end of the yield curve?
Right, well, again, I think that what Secretary Bessent did was noble, but you have to do it for a long time and with a lot more money. And I think that, the markets in the end of the day trump, not any individual person. I think high interest rates, again, it's not quite clear if it's actually manifesting in the underlying economy. It could have an offsetting effect on inflation, which is not actually a bad thing, because that is the one concern that we do see in the markets right now, is inflation. So it's all about trade-offs, right? What are we trading off? We're trading off higher interest rates for maybe lower inflation. And again, is this a long-term persistent problem, or is this something, that could change? We're in a political environment right now. We're in an election year, right? So a lot of what's going on right now. Now, I'm not going to use the word manipulation, but sort of, one has to look at that. That's why, to me, it's like stay the course. Yeah. Stay with your 80-20. Don't worry about what you see going on. It might not manifest. It might, but then you'll manage your risk downward from there. Right now, don't react to it, because you are becoming the bigger risk by reacting.
Julian Koski, Chief Investment Officer at New Age Alpha. Was this the first time you've been on the show with us here on Taking Stock?
Yes.
A terrific first appearance. Please come back and see us again.
I will do.
Enjoy your weekend. Grateful for your time. Skylar, grab your microphone. We'll talk
much.
again soon. All right, here are we're not doing analyst calls, pardon me. We're doing poly-market odds for appropriately Premier League Championship in 2027. More than $7 million in total trade volume on this question. Arsenal right now, 47% odds to repeat as champion. I don't want to say that too loudly around here. Next up, Manchester City at 21%. The boys from Liverpool, not the Beatles, the soccer team, 13%. Chelsea up next at 10% to win it all. Our special guest of honors here at the big board, Manchester United, sit at 9% odds to win the Premier League this year. They kick off their season tomorrow against Hull City. Tottenham Spurs, after nearly facing relegation last season, they are on the board at 3%. Final match day for the upcoming Premier League season, which kicks off today, but final match day Sunday, May 30th, 2027. All right, Howard, what a storyline this has been this week, my friend. 4.5% gain on the day, strong week for Target after lifting its full year outlook during earnings this week. Shares reaching a level they have not seen since 2024. Analysts from Telsey, Citigroup, and Goldman Sachs all lifting their price targets on the stock in response to strong earnings. Target, the best performing retail name by a long shot here in 2026. Shares now up 67%, since the start of 2026. Well, the New York Stock Exchange's very own Ashley Mastronardi sat down with Ann Philippik. She is CEO of Share Your Strength to discuss how their No Kid Hungry initiative aims to end childhood hunger. Take a look.
No Kid Hungry is on a mission to end childhood hunger. It was founded in 1984 and since 2020 has served 3.5 billion meals. Ann Philippik is the CEO of Share Your Strength. That's the organization behind No Kid Hungry. Ann, welcome to the New York Stock Exchange.
Thank you so much for having us.
So there's a lot of excitement today. No Kid Hungry is ringing the closing bell at the New York Stock Exchange before your annual gala. How are you feeling about all of the festivities?
Thrilled. I feel like we have so much to celebrate, as you just noted. And the New York Stock Exchange is such an extraordinary emblem of transformational investment in this country. And to come together with so many of our partners, so many corporate leaders who are investing in something bigger than themselves or their individual companies, but really investing in our kids, in our communities, and in our collective future.
How important for an organization like No Kid Hungry is it to have corporate partners to support you?
Well, it's extraordinary on so many levels and honestly, well beyond the funding that they provide. The platform, right? The ability to get the word out about this issue. I think so many people that I talk to are really shocked to hear that 1 in 5 kids in the United States faces hunger. They assume that might be happening in some other country, but not ours. And so for these corporate partners to use their platform to get the word out to their customers and to really raise up this issue is huge and is a big part of what we need to do to finally tackle it and truly end childhood hunger in this country.
One of the businesses that I was interviewing was saying that the other businesses that are here are not competitors today. They are all on the same page to help fight childhood hunger. Do you find that there is a camaraderie among your partners?
Yes, in fact, just earlier today, we had our Dine Advisory Board, which are a lot of these leaders in the restaurant and the culinary industry coming together. And they share best practices. They share what an idea that one of them had to get the word out, to get their customers engaged. And so it's truly a beautiful thing that they may, in a different place, be competitors. But here we're allies. We're all aligned around a common mission and really motivated by this vision of a country with no childhood hunger.
What does No Kid Hungry do? How do you provide support to all of these children?
So No Kid Hungry is the only national campaign that's dedicated specifically to ending childhood hunger. And so much of what we do is really understand what are the barriers that stand between kids and the meals that they need. And we work with school districts, community organizations, food banks to really go community by community and remove those barriers. So we make it easier for kids to participate in school meals, to get summer meals, and their parents, their families to access programs like SNAP.
Do you ever get feedback from the kids who benefit from your programs?
That's actually one of my favorite things about the work is I often get to go visit schools and see kids in the cafeteria just being kids, laughing and being joyful. And I'm always reminded when I'm in that space of the potential that exists with our children, and that it's really on us as the adults to make sure that any barriers that stand between them and reaching their full potential that we're removing. And really that's what the No Kid Hungry campaign is all about, is removing those barriers and making sure they have the chance to thrive, to find joy, and to reach their full potential.
You say childhood hunger is solvable. What makes you think that it's solvable?
Well, because we know that there's more food in this country. We have enough food in this country for every child to have what they need. And so it really isn't an issue of resources. It's about will. It's about collective will. And it's about, I think, people being aware of the issue and recognizing that it is an issue here in our country and committing to it and saying, whether it is talking to our elected leaders and saying this is unsatisfactory that 1 in 5 kids are going hungry, or whether it's volunteering in your local community, that we all have a role to play. And that is where the name of our organization, Share Our Strength, comes from, that we all have a strength to share. We all have a role to play. And that if all of us come together, that we truly can solve this solvable problem.
Anne Filippic, CEO of Share Our Strength, the organization behind the No Kid Hungry campaign. Congratulations, and thank you for joining us at the New York Stock Exchange.
Thank you.
Welcome back to this Friday edition of Taking Stock. Joining me now, one of our favorites and one of my favorite all-time guests, Katy Perry, CMO of Zero Hash, also author of the brand new book, Ticker Shock. We'll talk a lot more about that in just a second. Thanks for being here, pal. Happy Friday.
Thank you. Thanks for having me and for having my book.
Of course, SALT conference.
Yes.
Big potential market moving, activity going on the last few days. Some top line takeaways for you and your colleagues at Zero Hash.
Yeah, so quick context, if you saw a bunch of people invest in cowboy hats in photos, they were at SALT. This is the annual blockchain symposium that's put on by the Mooch, and it really brings together the blockchain ecosystems, traditional finance, they come together. So we had a whole bunch of people from Zero Hash on the ground. They told me a few things about what was really being talked about. One, the crypto extending beyond just thinking about it as buy and sell. So a lot of stable coins, real world assets, tokenized deposits, a lot of conversations, not just around price of Bitcoin, which had a very good week, but also sort of these other use cases. The second one was quantum, which is obviously a very hotly debated topic. A lot of these companies still believe that the so-called quantum threat is potentially not a threat or very far out, but there were some ecosystems talking about how they're getting ahead of this. Of course, quantum computing can do those complex math problems that some people think pose a threat to the advanced cryptography that these blockchains are built on. The third thing is, not a lot of people know this actually, but Wyoming has its own stable token, FRNT. Zero Hash announced there that they would be integrating that asset. It's a really cool, interesting concept from a state that you wouldn't see that coming from. And so lots going on there. A lot of, again, people in boots that aren't normally in boots. And I'm sorry to miss the party at the $1 Million Cowboy Bar.
And that was at Jackson Hole?
Yes.
Yeah, I think another big event at
I
Jackson
know.
Hole
They
coming up. It sounds like such a fun gig. I always have FOMO.
I know.
that I don't get to do
Me
the Jackson
too.
Hole
I have
gig.
the best outfits for it, and I never get to go.
You mentioned Bitcoin's big week. About
Yes.
Mr. Crypto going to Washington, Brian Armstrong, Vlad,
Yes.
meeting with the administration. What was the goal there, and what do you
Yeah.
think the top things to focus on would be?
Yeah, it was a symbolic showing of all these heavy hitters in crypto, as you mentioned, Vlad, Brian Armstrong, Ripple, all standing arm in arm with the president, and they're really making a case for why the United States, why it's an imperative that we lead in digital assets, and why getting the Clarity Act done is so necessary to that. And so they're really emphasizing the benefit to the everyday person, having the same financial regulatory structures and protections as the traditional financial system. And so it was really symbolic if you look at the photos to see all of them standing there. TBD how that moves the needle on Clarity though.
Okay, fair enough. Anthropic IPO
Yes.
chatter. What's
I
going on?
mean,
What's
we've
the
been
latest?
talking about
We
this for a
have.
while, but the streets are saying this could come within a month. This is coming off news that their annualized revenue run rate is $65 billion. Put that into context, that's what Cisco's at and Oracle's at roughly. Those are companies that have been around for decades. Anthropic is 5 years old. So we're looking at potentially what could be the biggest IPO ever, again, just a couple months after SpaceX. It took SpaceX 7 years to break the record last time.
The new book. Well, it's new for all of us. You've been
It's
working on it
new.
for quite some time. Ticker Shock.
There we go, yeah.
A playbook for investor relations, comms, leadership in the age of retail investors. What is it all about? What should people know?
Yeah, it's about the wave of retail investors, how they're following narratives, how narratives moves the market. A lot has been written about that topic, but this is for companies. If you're an executive, a comms person, IR teams, how to think about what this all means in the context of your business, whether you're thinking about IPOing or whether you're just looking out there and saying, gosh, I don't know how to handle all these Reddit investors. There's a lot of anecdotes, there's some funny stories, but a lot of really useful knowledge from hundreds of interviews I did with executives and IR teams to lead into it. And you can learn more at tickershockbook.com.
And you're doing a university tour? Do I have that right?
Yes, I'm doing a college tour. My first stop is going to be at Notre Dame. That's where I went.
Oh, nice.
I'm picking a football weekend right now. They're working
course.
with, they get it, right? They're like, what football game do you want to go to? And then you can,
Perfect.
but yeah, if anyone watching is a professor, I'll be going around. Hopefully you have a football team at your university, but if you don't, that's okay too.
The book is Ticker Shock. The author, the great Katy Perry. Thank you for being here. Enjoy your weekend.
Thank you, JD. You as well.
Don't go away. A lot more taking stock on this Friday from the New York Stock Exchange coming up right after this. tie too. That's a crisp tie, yeah. All right, welcome back to the show. Joining me now, a very special guest at this moment. Say hello to Andy Cole, Manchester United club ambassador, a Premier League Hall of Famer. What an honor. Thank you for a few minutes of your time, sir.
Thank you.
You just rang the closing bell down here at the New York Stock Exchange. Tell me about that experience, and any less nerve-wracking, I wonder, than walking out at Old Trafford.
No, I'm always on time anyway, so I was prompted really well. Well, it's a fantastic experience, got to be very honest.
We've got the upcoming season kicking off today and tomorrow. Some top storylines overall across the Premier League to keep our eyes on, and your expectations for the club?
Have a good solid season. I think the way we ended last season was on a positive, so if we can carry that through to this season as well. Start tomorrow morning, tough game against Hull, but fingers crossed we can get a win.
I wonder how you've seen the Premier League grow and evolve since your time player, right? Even new emerging technologies, VAR was such a big storyline in last year's season. Overall, what has most surprised you about the Premier League of today versus when you played?
I think that the game in general has all changed, the speed of the game. I think a lot of the boys look more like athletes now than footballers, But yeah, I think everything has to evolve. You mentioned VAR there. I'm not the biggest fan of that. I think it slows the game down. I think it takes away the debate when everyone goes down the pub on a Sunday to have a chat about football. We can no longer talk about it. So yeah, I'm not the biggest fan, but it is what it is.
I know a lot of greats from your era feel similarly. That's why I had a suspicion there. Manchester United, easily one of the most popular Premier League clubs, obviously not just across the UK, but here in the United States. At what point in your life, in your career, did you realize just how popular Man U is here in the US?
Me personally, having the opportunity to tour with Manchester United, coming over to the US has been crazy. I said earlier on today, when we were playing, it was more in Asia. But to come to the US now as an ambassador, it's like, wow. I can't believe how much the game's grown here. And long may it continue. You was fortunate enough to have the World Cup here as well. I think it's possibly going to grow even more since the World Cup. So like I said, long may it continue, and long may Manchester United continue to grow in the US as well.
You played for a lot of clubs over the course of your career. What now at this point of your life after your playing career most makes you want to align with this particular club?
Because I was fortunate to win a few bits of silverware with them. I'm one of the lucky ones, and like I said, I enjoyed my time at Manchester United, and when I was younger, I was a supporter of Manchester United as well, so it made things a little bit easier.
I got time for a little bit of a lightning round. I'm going to do my very best Kate Abdo impression, if you don't mind, with a couple of these. The best player you ever played with as a teammate?
Keenan Scholes.
Okay. Toughest defender, Andy, you ever played against?
Back then, I'd mostly go with the Italian boys who play for Juventus.
Okay. Oh, of course. One current Premier League player that you would have loved personally to play alongside while you were playing?
Oh, Thierry Henry.
I had a feeling you'd say TT. I love that one. Your favorite Premier League away ground? Not Old Trafford,
Anfield.
somewhere else. Where's it?
Anfield.
Is that right? Okay, amazing. Andy Cole, truly a United legend. It is really great to see you down here on the trading floor. Please come back and see us anytime.
Thank you very much. Thank you.
And enjoy the season.
Cheers. Thank you very much.
Don't go away. A lot more Taking Stock on this Friday from the big board coming up right after this. Welcome back to the show. Time now for a few headlines in the world of fintech, cryptocurrencies, and artificial intelligence you need to know as you head into your upcoming weekend. At this hour, the crypto majors, don't call it a comeback, up once again. Bitcoin currently up about 6% on the day, trading right around 77,432. Been a while since I've said a number quite that large. BTC Surge putting it up around 22%, a weekly performance on pace for its largest weekly gain going all the way back to March of 2023 as a huge short squeeze and fresh inflows into spot Bitcoin ETFs continue to fuel the multi-day rally. And no one is happier right now, arguably, than Michael Saylor. His firm's Strategy now sitting on an unrealized profit of roughly $1.4 billion as Bitcoin's rally pushes it further above the company's average purchase price of about $75,000. Well, Scarlett Sieber is now back with a whole new edition of Hindsight 2020, where she breaks down key dates in financial history. Take a look.
I'm Scarlett Sieber with Money 2020, and this is Hindsight 2020, where history reminds us that today's innovation often becomes tomorrow's regulation. So let's rewind the clock back about a decade, back to August 21st, 2017. Crypto, it was booming. Initial coin offerings, or ICOs, they were everywhere. Startups were raising millions of dollars by issuing digital tokens directly to investors. Some projects, they were super legit. Others were a little bit more than a website, a white paper, and unlimited optimism. And I appreciate the positivity, but that's not always the best path. Guess what? The regulators stepped in. The SEC announced charges against 2 ICO-related businesses, sending a clear message to the market. Just because something uses blockchain doesn't mean it exists outside of the law. At the time, many people viewed crypto and regulation as opposing forces. Innovation on one side, regulators on the other. But in hindsight, August 2017 marked the beginning of something much bigger, the transition of digital assets from experiment to asset class. Because once regulators start paying attention, an industry enters a whole new phase. The Wild West becomes a market. The rules begin to matter. Let's fast forward to today. Crypto ETFs exist. Major financial institutions offer digital asset products. Stablecoins, they're everywhere, and they're being debated by governments around the world. The conversation has changed dramatically. Many of those discussions trace back to a simple question. First raised back during the ICO era about a decade ago. When does innovation become finance? August 21st, 2017 reminds us that new technology can disrupt existing systems, but eventually those systems, they be responded. That is your Hindsight 2020, because every new financial frontier eventually encounters the map makers. Have a day in history you want us to feature? Let's talk about it in the comments. Drop it there. You know where to find us. It might make the cut. In the meantime, back over to you.
Let's do it. Welcome back to the broadcast. Before we wrap up today's show, we'll get you quickly caught up on what to expect next week here on Wall Street. We love weeks like this. There's a lot going on. On Wednesday afternoon, NVIDIA and its $5.2 trillion market cap, the biggest dog of the bunch, they report quarterly results Wednesday after the close. Plus, the latest quarterly results from names like Salesforce, CrowdStrike, they both report that very same day. We'll also get earnings from Dollar Tree and Dollar General with a good look at the health of the U.S. consumer on Thursday morning. Thursday afternoon, the latest numbers from Marvell. PCE inflation print comes out Wednesday morning, and the final University of Michigan consumer sentiment surveys cross the wire next Friday. Plus, yeah, that's not all. Kevin Warsh's first Jackson Hole speech next Friday morning as well. That'll do it for this Friday edition of Taking Stock. Thank you for watching the broadcast today. Have a great weekend. We'll see you again on Monday.